From there, it's just a case of just watching and waiting, holding price until we've reached that final target. Nice, easy trading using the higher time frame momentum in order to get us into a trade. This is the exact setup and model that we used to catch this 5% trade on GBPUSD yesterday on Monday, the 11th of November. So before I get into any trade, I'm always looking at where the liquidity is moving from and to. That for me is the most important thing. So I start my analysis always from top down. So I'm looking at kind of where liquidity's been swept. So you've got a clear liquidity move here. That's an external liquidity sweep. Once we have that external liquidity sweep, we then can see a really clear, bold, bearish move. Now, down here, we've also had an external liquidity sweep. So, you know, sometimes you can look at that and be maybe a little bit confused as to what you should do next, how you should play it. Well, the smart choice is that you sell from here and you buy from here, because that's premium pricing where people are going to be selling from, and that's discount pricing where people are going to be buying from. But if I'm looking at the overall structure to this marketplace, you can see that we are very, very much bearish. So it's a simple case of my bias has to be bearish. Nothing in here indicates to me that we're going to be going long. You know, if I were to get structure like this, then my bias would change, of course. But right now, my structure is very clearly bearish and pushing bearish. So we've taken external liquidity, we've then pushed down, we've taken external liquidity again, and we've pulled back up. But my expectation is still that we're going to go bearish because the structure shows me that we're bearish. So, you know, liquidity first, market structure second. So many trading strategies that you learn train it the other way. They say market structure first, liquidity second. It's the wrong way around.
There's a reason why you're watching this video and still not making any money trading. It's taken me 8 years to get to where I am with trading. It's not easy. I'd like to go through some of my achievements. My very own dog, my very own tree, my very own boy, my very own island. There's a really simple explanation as to why most trading courses and mentorship programs fail. You will not make it in trading unless you're told what to do and when to do it. And at Strong Money Forex, we not only give you a proven strategy and a step-by-step process to get funded, but also you get direct feedback, reviews, audits and mentoring from me. So if you're interested in finding out more, hit that link below and book yourself in for a call.
Liquidity has to be the driving factor. We've taken liquidity from the buy side, we've then effectively moved down, and we've basically created a new range that if we jump down to say the hourly time frame, we can see that we've got a new range, a new bearish leg that we can use to, you know, verify and support our trades. Now, we don't need to get in at the reversal points. That's actually, you know, a really amateur way of trading. If you're trying to get in at reversal points all the time, then 9 times out of 10 you're going to get caught short and you're going to lose your money. You need to be trading in line with the momentum, and you need to wait for the market to do the reversal. So to complete that move and show you bearish price action before you then enter a trade. And remember, you only need a little bit. You don't need, this is why we use the higher time frames to give us our bias, because you don't need a huge amount of direction. You don't need a huge amount of pips in order to catch a good trade out of the marketplace. So just then jumping down to the 15-minute time frame. So now I've got my bias. I can see that, you know, Thursday, Friday, we've clearly shifted. So, you know, I'm looking for a bearish setup because my market is bearish. Yes, I've had this pullback up here. That's absolutely fine. We can have that pullback. But then what I'm expecting and I'm waiting for is I'm waiting for a bearish leg to come into the marketplace. So we get this bearish leg here. So you can see this. This then gives us confirmed bearish structure. Okay, so now very much so I'm confirmed bearish. So for me now it's just a case of I need to find areas that I'm going to be, you know, interested in taking trades from. Now the 15-minute is where I'm looking for these trades. So I'm taking a trade after liquidity sweep. So I'm waiting for 15-minute highs to be invalidated like this, 15-minute highs to be invalidated like this. And what this shows me is that I've got institutional input in this market. I'm having 15-minute highs swept and then new structure created down here. New structure created down here. That for me is really clear institutional input to the bearish legs. They're taking out the highs and sweeping liquidity from the highs. They're then pushing the marketplace down, which means they're pulling the market up in order to get higher prices. They're taking out liquidity and then they're creating new lows. That shows us that we've got institutional input in the marketplace. We want to be trading in line with the institutions. We're trading in line with the strong money, okay? So when we come into the marketplace down here and we have this 15-minute liquidity sweep, which is here, and sometimes you see they won't be particularly huge. You've got to be ready and waiting for them. Once we have that 15-minute liquidity sweep here, it's just a simple case of them waiting for our setup. So we've got two areas that we could look for. So the original move that's taken this high to the left, okay, that would be our first target. So we mark that on as TP1. Then the external move that's created the entire pullback, that would be then our TP2. Okay, so we've got our target set. We now just need to find an entry. Then we find the entries on the 1 minute time frame, and I'm looking for a manipulation setup. So a manipulation setup is structure being printed. Okay, so bearish structure, and then an internal manipulation, and then a push away. So something like this, okay, that would then signal us into a trade. It's a really simple entry criteria. It's really, really profitable, and it works out really regularly. Okay, so what we then have is we have that 15-minute liquidity sweep. Okay, we have this breakdown here, structure, 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 and then we're looking for a manipulation. So that's our manipulation there. Mark that on red so we can see where the manipulation is. And then we're just looking for a move away from there. So we can place our stop above here. We get that move away from here. Jump back up to our 5 minute time frame. First profit target would be down here. Okay. And I think actually we got in a little bit later because we got about 5-6% off this trade. So it's about there. So I think we waited for maybe a 3 minute engulfing. Yeah, that was it. Okay. So you've had your manipulation here. Okay. You can see that clearly. Structure, structure, manipulation, push away. Okay, that gives us a real clear indication that we can get into a trade. So we can place our stop there. Sorry, place our entry there and our stop there. Like I said, it was about 5.5 we came out this trade, so we must have got in around here. We have an initial push away. We don't typically move to break even until we've taken that first take profit. So the first take profit would have come out here about 3.1. So that would be our first take profit. We take 80% off the trade here, and then we hold down for that external level. Okay, this is the exact setup that we use in Strong Money Forex. It plays out really, really regularly. It's a really, really successful trading strategy. We're using those higher time frame momentums, medium time frame liquidity points, and then lower time frame entry models to get ourselves into better trades. Cheers, guys. Catch you in the next video.